Last
Yeah.
week we got so excited we didn't even do the yo. So I gotta say yo, and welcome back to another episode of the Nyc Griff Show. Today is July 10th. It's 9:30 a.m. and we are excited to hop in here again. We've already had a little bit of a conversation. Let's just jump right into the numbers here and check out the markets. Again, I guess to everyone's non-belief, Bitcoin is up and down still, as we can all imagine. It looks like today we're down again, down to 20,000, 20,900. But we actually had a little run up here this past week. Here's the past week. We went from, what is this, right at about 20 up to just over 22 at one point, and then we kind of floated a little bit, and now we're right back at 20,900. And the S&P, I believe, had another, not another, but a good week. So that came up. It's currently sitting at 3,800. Everything's still down, kind of in the month to 3 months. All that stuff.
What's the
What
year
is
to date?
interesting? Check out this DXY dollar index. Look at this. This is the strength of the dollar increasing, increasing, increasing. Look at this. 10 years. All time. The dollar value was not this high has not been this high since 2002-ish.
What does that mean? That's a little confusing to me.
So this is a really strange one because we've got we've got US Treasuries yielding negatively against inflation. We've got the United States GDP contracting, which I believe those numbers for Q2 of 2022 are coming out soon or may have just come out. I haven't looked yet,
I think
but
they come out in 2 weeks, 25th.
couple weeks. Okay, so in Q1 we had a 1.4% contraction. I heard some people talking about predictions of another -2%, which by definition would be a recession, right? 2 quarters in a row of negative GDP or contracting GDP is a recession, and then you've got foreign currencies inflating at double digits now. We're seeing all over the world, and we're also seeing there obviously to uh, on the opposite side of inflation, we're seeing those foreign currencies decrease in value and the dollar's increasing in value. So what does that mean? That means that shit is getting real tight. That means we're coming to a head. That means that it's more expensive for foreign nations to trade with us, right? Because their currency is worth less and ours is worth more. Where they want to save their money in U.S. dollars is getting more expensive and yielding negatively, and GDP is contracting, meaning we're not exporting as much. So the country is contracting, right? The economy is contracting. These are not good things, right? These are not good things. Looking at volatility, the CBOE, the Chicago Board Option Exchange Volatility Index, or more commonly known as the VIX. You can kind of see it in the all time. Let's just do the 10-year look. I mean, here's kind of I guess you could say your average is right around. Looks like, I don't know, anywhere from like 27 down to, what are some of these lows? This low was 9, but look at how much higher it is right now. In these last couple of years, it goes way up during COVID, comes back down, and now it's still gone up pretty high, and it's sitting right now at 24, which is, you know, back here in June or January of 2016 is at 27. So I mean, we're approaching, and this is kind of an average level right now, and so the volatility is higher than it typically is. We know that the Dow Jones and the Nasdaq all look pretty similar to the S&P. Looking at the 10-year, man, it's crazy, isn't it? How you have this huge run up from COVID. And now we're seeing this huge fall off. And I think
Well,
we're
oh
seeing the huge fall off because it wasn't real in the first place, right? I mean,
well,
look at
oh
this
wait,
big,
well, oh wait
look at
as
this big
well.
Bitcoin fall.
It's
So
my only question is like, how far can we fall? Because, like you said, 10-year 2008 was obviously a pretty large crash, but we've shot straight up since then. We would believe on this podcast, I believe mostly because of QE and a little bit more QE, and obviously COVID inflation,
and
stimulus, and
and
things like
you
that.
can't forget QE.
But you can't forget QE. I mean, like, that's just the craziest thing ever. Like, it's crazy that they proposed that and didn't, like, it wasn't just like, boom, public information. Yeah, so inflation is going to be crazy in like a certain number of years. It was already getting bad too before it was at what 8% last month. It's been pretty bad for some consistent months. I was going to share the Fed's balance sheet real quick and get your take on that. I don't know if you've ever looked at this, but this is the Federal Reserve's balance sheet. And when did they announce QT? It's supposed to happen in June.
I think they've already begun doing that, but I'm not exactly sure though.
Well, they haven't posted it because total assets actually went up April to May. So it would have to go down at some point, you'd think. But
Wow.
I don't know. I just find it interesting. They're saying one thing. They're going to try to do one thing. I mean, like, they're trying to kill demand. They're trying to
Yeah.
curb everybody from wanting to participate because the Fed sees the fact that we probably need a recession. The government does not want a recession. I mean, Democrats could not want anything less than a recession if it just makes them look
Yeah.
terrible. So we're at this weird time where the Fed and the White House, I don't think, agree. And I don't really know how that's going to shake out because they do have to start QTing if we're ever going to, see prices that we ever saw before. You literally can't, otherwise it doesn't work. Like, I don't understand what everybody thinks. I'm not even sure if QT would fix inflation. It doesn't make the world deflationary. I mean, like, things can get cheaper to a point, but inflation has already, I mean, gone up quite a bit. I mean, they printed 40% of our money. I don't know what the official inflation rate is. I know it was like in the 8%. I don't know what you think it'll be. It's Monday or Tuesday this week it gets announced.
Something like that. Yeah. I was going to
Yeah.
show you this too. So in the CARES Act, can you see this here?
Yeah.
So the CARES Act that they had signed in it was either I think it was 2020, actually added like savings accounts, money market accounts, all those things to the M1 money supply. So if you look at let's just look this up real quick here. So M1 money supply, um, you see this huge jump here, right? I mean that is like that's scary to see that large of a jump, but it's easy to miss that in the CARES Act, um, all those savings accounts and money market accounts that were previously in M2 money supply actually got added to M1 money supply. So this huge shift from, what is this in billions? So that's $4 trillion shoots up to 16 trillion almost overnight. Is actually not just an increase in the money supply. That is just M2 money supply being added to M1 money supply. So the more accurate measure of money supply today is M2. And whenever you look at the M2 money supply, you can actually see the real life printing here. And maybe there's some more details that I'm missing, right? But still, February 2020, we're looking at $15 trillion in M2 all the way up to 18 trillion pretty quick there. So that's from February of 2020 to June of 2020. So a little less than 6 months, right? And you can see that money supply has increased since all the way through to here we are today where it's started to reduce down a little bit. Zoom this in a little bit here so we can
Can
see
you
some more
go to
details.
max? Can you just
Huh?
go all the way back? Can you go as far back as possible?
Yeah, let's see. That's
Which is
the max there. So we can see that the money supply has increased over time,
okay.
obviously, right? This is as far back as it goes. So this just goes back to 1980. So maybe I don't know why it doesn't go back further,
No,
but
yeah, I think you have to click the. Do you click the max button?
I did click it. Yeah.
Maybe
I
it's
don't know.
I honestly think it's because they actually only started reporting like around that time,
Yeah.
which is so funny, but there's other places to get the information, I think.
But the interesting piece about this is that we get to buy the hardest freaking money known to man, or what will soon be the hardest money known to man, because technically Bitcoin or gold is still a harder money because Bitcoin is still inflating, or the supply is still increasing faster than gold until the next halving. But that means that we get to buy at discount today, the hardest form of money, and the value in that hardest form of money is that one Bitcoin is one Bitcoin. That is really the main point of the market check every time around. But Griff, today I'm excited to talk about this topic that we've got prepared on volatility. Volatility is a big piece that people like to talk about, especially people that haven't done any of the research. Right, all they see is the Bitcoin price, and that's pretty much the entire sentiment of the market. Right, that's exactly how people base their opinions on whether Bitcoin is doing good or doing bad. Right, I think volatility is a little bit deceptive in some sense because you're not always comparing apples to apples. You may be comparing not even apples to oranges, like apples to freaking planets or houses or table lamps or something. They're just completely different things. Whenever you compare, call it Bitcoin to the S&P 500, right, which a lot of people are doing right now. And it's important to understand what the volatility of Bitcoin means. So just a couple of definitions here as we jump in. So volatility is a statistical measure of the dispersion of returns for a given security or market index. In most cases, the higher the volatility, the riskier the security. So volatility is often measured as either the standard deviation or variance between the returns of that security or market index. Basically, volatility is how much does it go up and how much does it go down on a regular basis in a set period of time, right? So that's the volatility. And then the dispersion, right, is basically I like to think of this as just the standard deviation, right? But it's the statistical term that describes the size of the distribution and values expected for a particular variable that can be measured in several different statistics. And it mentions here range, variance, and standard deviation. And so volatility in a quick cap is it's just how much does the price go up and down on a regular basis, right? Now, another important piece to note here is the size of that market is so important to how volatile something is. Now, I like to think of the size as the market cap. Market cap is a pretty quick and easy rough metric to find what the total value of that entire market is or that entire security is. But the Investopedia definition is market capitalization, or market cap, is the aggregate market value, aggregate meaning all the pieces added together, right? So the aggregate market value of a company represented in a dollar amount. Since it represents the market value of a company, it is computed based on the current market price of its shares and total number of outstanding shares. Market cap is also used to compare and categorize the size of companies among investors and analysts. So market cap is typically used for individual companies, but you can also use it for entire asset classes like real estate, equities, treasuries, Bitcoin, crypto. You can use it to kind of put a rough size or valuation on an entire market. So as we get started into this, we've got to talk about market cap and volatility and how these two play in together. So Bitcoin is volatile. Absolutely. Hard stop. Bitcoin is volatile, and there's a reason for that. So in order to kind of wrap this up into a nice little example, think of it like this. If a market capitalization of industry X is, let's call it $100. We're going to make this super simple. It's $100 total market value, and that price drops by, or the market capitalization drops by $10. That's a 10% decrease in total value. That is that's volatility in some sense, right? It's a decrease in value. Now, if it also were to go from $100 in market cap to 110, it's not an exact 10%. It's a 10% increase. So exactly 10% increase. Now, if it went up 10 and down 10, that's volatility, right? There's a standard deviation you can find there that would show you what it goes up and down on a regular basis. So, but it's important to note that the market cap plays a huge role in the volatility argument, right? So, Bitcoin, the price goes up and down by how many times have we seen an 80% drawback in the history of Bitcoin? Griff, do you have any idea? 4 times? Is that an
Probably
exact
more.
number? It's
I
something
think
like that, right? There,
I
it's
think it.
happened
Well,
multiple times.
I do know that it's only been 4 times that basically Bitcoin, as it sits at 20,000, is like an insanely good buy. I think because of how far the drawback is.
Yeah.
So I think it's happened 4 times.
Yeah. So, and then the next question would be, how many times have we seen 80% drawbacks in the S&P 500? I don't know that we've ever seen an 80% drawback in the S&P 500. I think we probably actually have, maybe a couple of times, but it's significantly less, and it's significantly less volatile than Bitcoin. Why is that? Let's talk about market cap. Again, market cap is the total aggregate market value of a company, of an industry, of an asset class, whatever we're looking at, right? Now, the importance is that the market cap, as it increases, that means that that the amount of money or value that you would have to put into the market or take out of the market to impact that entire market value is significantly altered. So, if we want to have a ton of control over the price of some asset class that has a massive market capitalization, we are going to have a lot more capital to move that market. Whereas on the opposite hand, something that's got a much smaller market capitalization, we can utilize a smaller amount of capital to move that market in the same percentage, right? So think about this. Do you know what Bitcoin's market capitalization is right now, Griff?
400 billion, 411 billion.
It's right around 400 billion, somewhere give or take, right? I think it's just over 400 billion.
I think
That's a
yeah.
lot of money, man. That's a lot of value. $400 billion is a lot. How about the S&P 500? This is probably one of the most traded United States securities in the entire world as far as indexes. Do you have any idea what the market cap of the S&P 500 is?
30 trillion. I think only because you told me about it before.
It is. It's right around 30 trillion again, give or take, right? It's a little more, a little less. What does that mean?
It's
Market
much
cap,
less volatile.
huh?
That's what it means for sure. I said it's much less volatile. That's what it means for sure. If it's at
It's
30
a
trillion
ton
and
less
something else
volatile,
is
right?
400
I
billion.
mean, think of
Yeah.
how much does your how much does, let's call it $1 million. How much does $1 million impact a total market pool, if you will, right? Total market capitalization or pool of $30 trillion versus that $1 million affecting $400 billion. Well, you're going to have a lot less impact on something that's significantly larger than if you were to play in something that has a significantly less market cap. Think of it like a pool, right? If you throw a rock in a pool, you're probably going to see the wake of that rock through the whole pool, depending on the size, depending on the rock, right? If you were to throw that same rock in one of the oceans, right, one of the major oceans on the earth, you're not going to see the dispersion of that energy through the entire ocean. And that's exactly what volatility in these different markets is. So in this example, comparing the S&P 500 to Bitcoin, Bitcoin is the pool, and the S&P 500 are all the oceans combined. This is what we're talking about, right? So whenever we think about, man, Bitcoin is so volatile, and you use that as an argument against Bitcoin, well, it's not a strong argument because you're not comparing apples to apples, right? You're trying to compare the impact of throwing a 1 pound rock into a pool, into a small pool, versus throwing a 1 pound rock into the oceans. It's just not the same. It's significantly different. Griff, what are your thoughts on that so far?
I just like your analogy a lot.
I thought it was a
Mainly.
pretty good one, right?
Yeah, I thought that analogy was fucking fantastic. I kind of compare that analogy to you could count to 1 million in a year or something like that. Like you could count to 1 million in weeks. To count to 1 billion, it would take you like 31 years to count to the number of billion. So kind of like similar to that analogy. Like I love how you said throw it into the ocean, because that's kind of what money is at this point. Like there's so much of it and it's so inflated. It's like the deleveraging is going to take quite a bit of time. I mean, it's just um people can't expect, like they can't expect a crash. I think I see so many people calling out a great recession or depression. This might be one of the slowest grind downs ever. I mean, that's kind of how I see it. I don't know what you think, but um, with the way everything is leveraged and how it works, and how non-volatile, I mean, like it's been crashing all year, but like you still have a lot of people that are able to somehow not lose as much money, or if you're a good trader, you can even make some money. So I'm
Yeah.
not so sure like how the crash goes, you know what I'm saying? I'm not sure how like things change, but I would say if there's $30 trillion in stocks, and we're not even talking about the bond market yet, how much money's in bonds and treasuries, like I mean, we're trillions and trillions of dollars, hundreds of trillions of dollars. How much of that value can actually be transported into a network that we know as Bitcoin,
Yeah.
and only 21 million? Um, what does that make it worth? Did you say like if Bitcoin's market cap was $30 trillion, the price of one Bitcoin would be what?
Say that again. Oh yeah,
If
I don't know. I mean, what would that be? $30 trillion divided by 21. Let's see.
I mean
I
that's
don't even
just,
know. I don't even know if I can. I'm gonna have to turn my phone sideways to do $30 trillion.
I mean
Okay, so
it's
there's 30 million.
whatever
There's
the price is
300.
now times
Okay,
about.
there's our number. There's our $30 trillion number. If we divide that by 21 million, that is going to give us a total market value of one Bitcoin at $1.4 million.
I think it
That's
can
where
happen.
that and that's assuming, but again though, I don't know, I think that Bitcoin will still stay separate from the equities market. I think it will be a separate deal. I think that there probably will be a ton of value moved to Bitcoin away from equities. But I think that there is still going to be a separate equities market, but it's significantly going to grow. And Griff, I got to show you this because I don't think I've ever shown you this before, and
Although, do you
you'll
feel, before you move off that point, do you feel that there are certain industries and certain companies within the S&P 500 that
yeah.
Bitcoin will suck value from, just because
Absolutely.
of what Bitcoin
Absolutely. Yeah.
network is? Yeah,
Absolutely. Absolutely.
some of the value.
Okay, you're gonna love this, Griff. Here, so talking about the size of all these different asset classes. Check this out. Okay, so this is all the world's money and markets in one visualization. So think about this. It says how this visualization works. One square here, each square is this size is worth 100 billion dollars, and then on the right side here, there's context to each and every piece here. So silver has a market cap of 100 billion. Cryptocurrency has somewhere around obviously over 100 billion, right? But we can see these different things. I'm not going to get into the details. I'm just going to scroll here and just kind of let you get a visual. Military spending, U.S. budget deficit, coins and banknotes, the Fed's balance sheet added since 2020 right here. Look at that. January 1, 2020 added since. Billionaires, gold. This says here the world's total above ground gold reserves are estimated at 197,576 tons of world gold tons by the World Gold Council. Blah blah. Blah. Gold's world the world's gold is worth $10.9 trillion. So 10.9 roughly trillion dollar market cap. Here's the Fortune 500. Here's the stock markets. Griff, you're going to shit your pants here in a second. Watch this. Money supply. Okay, here's the total money supply. Global debt. Look at this. Households right here. You've got governments. You've got non financial corporates. You've got the financial sector. Global real estate. Here's residential, right? This huge piece is residential, commercial, agricultural, global wealth. Look at this. According to Credit Suisse, all global wealth tallies to $360.6 trillion. 31.8% is here in North America, which is interesting to think about. Europe, Asia Pacific. I mean, look at this stuff. Derivatives, look at the derivatives market. Holy shit. This is the, I mean, what are we talking about? Is that not crazy? I mean, this is a great website for anybody that's just curious to see what the size of this stuff is here. But look at this here. So billions, trillions, or quadrillions. This is value. This is total value here in billions. So silver, 44 billion. Now I don't know exactly when this was put together, but cryptocurrencies, as we know, Bitcoin itself is at 400 billion. So this is 244 billion. It's saying for cryptocurrency. So this has got to be old data. But you can get the feel here, right? You can get the feel here of what we're looking at. But I mean, dude, how crazy is that?
I just think it's a run up of, I mean, gold, but fiat currency for a long, long time now. And
Yeah,
derivatives, obviously, that is like the least shocking, but most shocking one at the same time,
yeah.
because obviously trading futures, shorting, call options, all these different types of trades people make, I think is an industry we could just do away with, if I'm being completely honest, because it just doesn't add any value to the world. I mean, that's why I really was shocked at that one, because it's like, how many smart, um, innovative people are just trading derivatives?
Yeah.
I mean, it's just like, but for what? To stabilize the market? No. Like, that's what they're allegedly intended to do. Manipulate a market, yes, because money is pretty centralized, if you would not agree. So it's like, I don't know. That was pretty shocking to see derivatives being that big, but not shocking because understanding what derivatives is a little bit, but all at the same time, the money supply is controlled by 31.8% of the United States, but really like the wealthy billionaires, you could see how much money they had even relative to some of these market caps. I don't
Here
know,
you go.
man.
This
Corrupt.
says the primary purpose behind derivative contracts is the transfer of risk without the need to trade the underlying asset. This allows for more effective risk management within companies and the broader economy. In addition, the derivatives market plays a role in information discovery and market efficiency. See, this is where I feel like I have like some conflicting beliefs because I believe in insurance. I believe that insurance is good. I instead of in well, think about this. Think about this. If you
Insurance
own
is
a two
necessary or insurance is good?
if you have a $200,000 home, do you want to insure that home by keeping $200,000 of liquid capital on the side just in case it burns down and you need to rebuild? Or would you rather pay a monthly premium and transfer that opportunity cost to an insurance company? I would rather use an insurance company. I would rather do that
I would
100%
rather
every
a
single
home
time.
I would rather a home doesn't cost so much money.
I mean, fair enough, right?
But that's why
But
I'm saying necessary or good, because we're on a Bitcoin podcast. So I'm going to dream about the great future of Bitcoin and
fair.
go, it is it is fair to say that, like, with technology nowadays, the world should be getting cheaper and cheaper for people. Like, money should be doing better. And obviously it's not, which is like, it means the money is failing, because your money just shouldn't lose power. But I do get what you're saying. Yes, like in today's world, insurance is absolutely necessary. I mean, I'm not going to
Mhm.
buy a home and then not insure it. I'm not going to buy a car and not insure it, because I don't have not everybody just carries around liquid cash nowadays. They put it into an investment portfolio they can't touch.
And
They
that's the value of insurance, right? Real quick,
right.
and I don't want to dwell on that piece, but what I think is funny here is that they talk about the transfer of risk, which is this is where I feel like I'm conflicted because I understand and I like that principle, but also at the same time in a Bitcoin world, it's about self-sovereignty, right? It's about taking responsibility. It's about being accountable for what you're doing. And this whole derivatives market, I mean, it just said the purpose is to transfer risk without having to trade or sell the underlying asset. And it's like hey, I want to do this and I want to take some risk, but I don't want to take the risk to take that risk. And you're like,
Yeah,
wait a
it's
minute,
silly.
somebody who's taking responsibility, who's accountable for
It's
for the
silly.
actions that are taken, you know?
And you want to know what? Bitcoin obviously was Celsius, Three Arrows, Voyager. I mean, how Coinbase being weird about how much Bitcoin they actually have.
Yeah.
Maybe Bitcoin is just showing you on in a micro scale what could happen on a macro scale, because that is what the world is leveraged on at this point. Is the exact same thing. People who think they're smarter than money. And I think at the end of the day, money gets everybody, because money is, as we discussed on like the first, like, what is Bitcoin? I don't know, man. Like time. Bitcoin is changing what money is to the world, just like the internet
Bitcoin is just
changed
about
what.
everything, right?
Well, I mean, it's a new paradigm. Like, it is changing the world. The internet changed the world. The printing press changed the world.
Yep.
Agriculture changed the world. Bitcoin
And
is more in line with
industry.
those things than. Right.
Yeah.
And those things, I'm telling you, like the printing press, bro, there was crypto scams to the printing press. I promise. I mean, like all great innovations, there are detractors. It is. It's
Yep.
just is what it is. The coolest thing about Bitcoin is that nobody owns it. I mean, like, it's nobody's, it's the people's, and
Yep.
it doesn't have like any marketing team or anything like that. And look at where it's at relative to all these other ones. Like, I just don't understand, like, as we get to minute 40 of this podcast, like I do every time, what are people not already seeing in Bitcoin is much to do, I think, with just how everybody gets information nowadays. I think that the way people get information, we all get into these weird different little rabbit holes. And unfortunately, like we said the other day, you have to trust your own intuition at some point. Everybody makes their own choices, and not all of them are going to be right. It's not, I'm sure I make a bunch of poor choices. Like, I think maybe those carnivore diets are good. Maybe they're not. I don't really know, right? I haven't done the real research to know whether the kind of carnivore diet is good or not. But with
Yeah.
Bitcoin, I have, because I've been in the carnivore diets of Bitcoin with the cryptos, with the Doge coins. And now I'm like, I've been all Bitcoin for a while now. And it's like, yeah, because when you listen to Saylor talk about it and he like really equates Bitcoin to these huge things that happen, Bitcoin is the biggest thing that will happen in our lifetimes. I mean, it just is, because it's already too big. I mean, like, it can't, it's not going to be undone now. It's out there. And while people will still try to make money from crypto, I mean, undoubtedly, they will continue to try to do it until it gets regulated. And even the SEC chair, Gary GG homie Gensler, he was like, Bitcoin's the only commodity out of all the projects. He's like, it's the only commodity. It's like,
Yep.
yeah. I mean, then that's the truth.
For
Even
sure.
to this day, nobody has been able to make a truly decentralized product better than Bitcoin. So it's
Yeah.
probably not going to happen at this point. Somebody
Yeah.
would have had to have already built it for it to have like even been close to Bitcoin. The next big
Yeah.
thing, I think, will be a side chain on Bitcoin. But this is all more in line, all the way back to volatility. One Bitcoin will always be one Bitcoin. So it's perfectly involatile too. I mean, like, I love the conversation about volatility, because if you're like, volatility is the point where if we have some listeners that are at this point, we've all talked about volatility. That's like chapter 6. I don't know, in the Bitcoin handbook, volatility is right in there, and Nick is hitting the nail on the head with a lot of it. But Bitcoin is perfectly involatile. Bitcoin changes economics. Bitcoin changes, like, it changes the world, because it could literally change what money is. All these other ones is the same thing. And we've never had perfectly sound money. I mean, we've had renaissances. I mean, I know there's people who write about some of that stuff. Um, and maybe that's what we're headed for. But if we're headed for a renaissance, there's going to have to be some pretty bleak times ahead, to be quite honest,
Yeah.
before we can rise from the ashes a little bit. But
So on back on the volatility piece and how this is kind of looking right now and what it may look like into the future, right? We've talked about this multiple times here. If you guys are watching, you can see, but Bitcoin or Bitcoin with a lowercase b or a capital B. The lowercase b Bitcoin is the hard money, the sound money, the fixed supply of 21 million Bitcoin. Bitcoin with a capital B is the investments, the network, it's the infrastructure of the entire network. So now think about an adoption S curve. An adoption S curve basically goes from zero adoption, that nobody's using it, to all the way up to the top right where everyone is using it and it's massively adopted. And that adoption S curve is in the shape of an S, meaning that it grows slowly, grows real slow, and then there's a huge exponential increase in usage and adoption, and then it plateaus off as the vast majority of the market is has been absorbed into that new network, right? So a couple of thoughts here on that piece is that uh, volatility will matter if you're trying to be in and out of the market in a short time period, right? Which we've talked multiple times ad nauseum about buying and holding Bitcoin for the long term. Bitcoin is not a short term investment in my mind. It may be for somebody that's more speculative, but again, you can't time the markets. The markets are emotional, they're not logical. You can't time the markets. And there's a couple of people out there that have done it a couple of times. All those chart gurus out there and stuff. I just don't think that there's any way that you can truly time the market. You can follow macro trends and all that stuff, but you can't time the market, right? But here's the beautiful part is that Bitcoin is volatile right now today in dollar terms, in US dollar terms, but it won't be forever. And the beautiful part is, as that Bitcoin with a capital B, the network and infrastructure, as it continues to grow and it becomes more useful in everyday day-to-day life for everyone, more people will adopt it because it's a better form of money, because it's a more efficient form of money. And as more people adopt it, what happens? More capital floods into the asset class. As more capital floods into the asset class, the market capitalization increases, right? The total size and the pool of that asset class increases. And what happens when your market capitalization increases? The volatility decreases. Now, these are all in terms of US dollars, right? So again, you've got to be very conscious of your perspective, because if we always look at things in terms of US dollars, then we're missing the point, right? We're
Well,
missing the point. But
and I,
the fact of the matter is that today we do live in a dollar denominated world, and it's the only way that we're able to utilize, or the only way that we're able to value and conceptualize in our minds what the value of something is, right? Because that's what we've grown up with. That's what the world is that we live in. I love the idea of using Bitcoin as your base money and valuing things in Bitcoin. But the reality is that I pay for everything that I pay for in dollars. I make my income in dollars. And that's how I conceptualize the world, right? So in terms of volatility with the dollar, yes, Bitcoin is volatile right now. Its market cap is also significantly almost what percentage would 400 billion be of 30 trillion? Let's do some quick math here. Let's see.
quick math ain't happening.
Okay. Divided by 400 billion. Oh, I'm off there. Uh,
It's a
Either
small
way,
percentage.
it's very tiny. I don't.
So
I don't.
I want to draw a comparison to, or just kind of make a couple analogies as well when we're talking about Bitcoin, because this is the truth. If you've studied it, Nick was talking about how it's the base layer, right? Like there's a base layer. Bitcoin is the base layer. The network right now, it is the base layer to what really? And in my opinion, Nick would kind of, I think, like this comparison. Manhattan, if you could buy the real estate in Manhattan. And I don't mean that from a real estate perspective, because that's what a lot of people say about Bitcoin. I mean that from a network perspective. The United States had network effects.
It's
What we were doing
1.3%.
here,
It's
nice.
1.3%, Griff.
What we were doing here in the United States is building a network at some level. And Bitcoin is only in its 13th year, but you're getting to buy it in its 13th year. You're like getting to buy America in its 13th year. And America was largely built on, I mean, freedom, capitalism, democracy, up until like nowadays, we're not really there anymore. But if you buy Bitcoin, it's like you get to buy an America that can never change. It's always going to be the same. It's not really governed by anybody. And I
Yeah.
think that's really important. Like when you think about it, like when you're buying it right now, yeah, you're buying this asset class that money will pour into it because it's not volatile and everything else is. But also, very much also, the network that's getting built on it, like what will get built from Bitcoin layer 1 to Bitcoin layer 2 to Bitcoin layer 3, then Bitcoin layer 4. Like this is the question to ask, Nick. When Bitcoin is worth a million, 2 million, 3 million, 4 million, when your Bitcoin is worth so much US dollar, you don't give a shit. What is it going to take from an entrepreneur on a Bitcoin layer 3 to get your Bitcoin? Just and just to get a million sats, because that's how much a million sats are going to be worth. They're going to be worth enough to literally start a company in the Bitcoin network. What's it going to take from you? Because you're an early investor. You're going to be one of the people that really does have way more Bitcoin than everybody else. What's it going to take? I mean, I'm talking you're 80 years old. You still have how much fucking Bitcoin? You got mansions, castles, whatever you want.
Yeah.
And somebody says, Nick, I want your Bitcoin. And here's the difference between what happened in America and now what Bitcoin is. Even at 80 years old, after you have all the stuff and everything, it might still be really hard to get your Bitcoin. If you're somebody who's just like, why? Because one
Yeah.
Bitcoin will always be one Bitcoin. So the innovation that comes from the Bitcoin network in comparison to what's happened in America, although America, at the beginning of this podcast, we literally started talking about, you know, it's not like America, like the concept of like what we've done here has failed. Like the world is a better place now than it was 50 years ago, unarguably, just from like a medicine standpoint, like a civilization standpoint, technology standpoint. Like it has, it's not a failed experiment. But how much better is Bitcoin going to be from the simple fact that the people buying it right now are going to be in control of who gets to build on it at a certain point, right? When
Yeah.
the price, Nick said, when the price becomes not volatile in Bitcoin, all you need to know is that that theoretical price is in the millions. And to get somebody's Bitcoin at that point, you're going to have to actually ask them for the best form of money to ever exist. So what kind of innovation is going to sprout from there? I don't know, because it's going to take a lot for somebody to get my Bitcoin, but I will invest, right? Like we will grow the network. We will put our sats into something we feel like is going to get us a return and at the same time build a better world. But I would argue that a Bitcoin world is going to be umpteen stronger than what the American empire has been, just from the standpoint that investors build the world. I mean, you have to get the money from somewhere. Entrepreneurs have to go to somebody at some point for money. And if those people are giving money with the best intentions possible, just because one Bitcoin is always one Bitcoin and it's perfectly non volatile, how much better is the world going to be? I don't really know. But that's kind of what I was thinking. This whole volatility speech you were given, it's like, dude, when there's no volatility, how much better is the world going to be? Because when you hold the money, you don't have to worry about beating inflation. You don't have to worry about investing it and hiding it from taxes and doing all this stuff. All you got to focus on is building a better world when nothing's volatile. And if you know
Yeah.
Bitcoin, you're investing in something that at some point this US dollar price, you're looking at oh 02 million. I mean, there's only 21 million Bitcoin, guys. There's more millionaires in the world than there are Bitcoin.
Yeah.
You have to think about that because Bitcoin does not care. It's going to keep going. The network will continue to grow. You can
Yeah.
cry all you want, but that has literally been the case for the last 13 years. That's the
Yeah.
investment. The investment is the network. The money is so when you make this investment, the money is so that when it actually works out in 10, 15, 20 years, and you can go to Taco Bell and spend your Bitcoin if you want to lose your sats that way, you can do that. But just know the network is going to even grow from there. Because what we're growing is a monetary network like the US dollar, like the British pound, like
Yeah.
keep on going down the list of empires. But it's one where the investors are plebes buying it right now and holding the hell out of it. Like I'm
Yeah.
telling you guys, there's people that hold this Bitcoin that have had it since 2015, and you are never getting it. ever, because they know what I just said. They know that if they just hold on to it forever, maybe they won't be the Warren Buffett of this era, but their great grandchildren will be.
Yeah,
And that's kind of what we're competing with. So it's kind of interesting that we talk about volatility, and then we
for
also get to
sure.
talk about the history of it and what a world could be like without volatility. You can be as optimistic or pessimistic about that as you want,
Hmm.
but you have to see that value as an investor. Like
Yeah,
that's the value. Like you're literally getting all the benefits of what this network will be, and you can never get debased. It will never happen. That's
yeah,
you've never been able to offer that. And eventually, when the Rothschilds hear that, they're going to be like, "I need to buy as much as I can." Literally, that's what they're going to say, and they're going to
yeah,
come and try and get it from you any way possible. I mean, we're talking, dude. They took everybody's gold. That's been an episode of ours on this podcast. And as the world gets crazier and crazier, it's so funny, Nick. We did that. We started this podcast, January of this year.
January. Yep.
The world's going crazy. You don't think that at some point a perfectly non-volatile network, as we talk about volatility, that a government's not going to try and come for it. The richest families in the world aren't going to try and come for it. They will. Because at that point, if they don't get enough, they won't have the same luxuries they have today. And they will fight for that. But
For sure.
that's
Yeah,
why you don't see Bitcoin you have. We got to stop telling people, because then they're going to come for your ass at some point. You know what I'm saying? That's
for
what some
sure.
people say.
Well, I mean, some of my key takeaways here are this: volatility doesn't matter if you buy and hold for the long term, right? And I think that this is just an investment and savings principle. You shouldn't be investing and saving more than what you're comfortable doing, right? I mean, I know that you and I are pretty good about this, but I think there's a lot of people out there that are over leveraging themselves, or maybe investing or saving money that they're going to need in a couple of weeks, or that they may need in a couple of days. You shouldn't do that. Don't
What's the
do that.
easiest way to lose all your money, in my
That's the
opinion?
easiest way to lose all your money, and
Go
you're
get
going to
wrecked.
be stressed. You're going to be stressed the f out if you don't do
Yes.
that. The money that I invest in Bitcoin is not money that I'm going to need anytime soon. It's my long term savings, right? And that's the beauty of it. Um, more on that. If you buy and hold for the long term, you don't have to worry about it, right? And another thing that is super funny that is that Bitcoin always gets this comparison to the S&P 500. Bitcoin is a commodity. It's a hard asset. It's not a security. So you're already different there. But the the size of Bitcoin by market cap is 1.3% roughly of the S&P 500 market cap. I mean, Bitcoin is tiny compared to the S&P 500, which again makes it more volatile. The smaller the market cap, the more volatile something can and probably will be. A little bit further, the dollar price of Bitcoin does matter. It does give us insight into the adoption of Bitcoin, right? And as we talked about earlier, as adoption increases, more capital flows into that asset class. And as more capital flows into that asset class, the market cap increases. And as the market cap increases, volatility decreases. Now, if Bitcoin's market cap were to increase to that roughly $30 trillion market cap number of the S&P 500, Griff, the price of one Bitcoin would be $1.4 million. Hey, I mean, that's okay with me. And we're just talking about the S&P 500. We're not talking about gold, we're not talking about silver, we're not talking about treasuries, we're not talking about any of that. Just the S&P 500. And that's a $1.4 million roughly valuation. Very rough calculations here, obviously. And so as adoption increases, right? There's no reason to think that market cap will inherently increase as adoption increases, reducing volatility. And so my key takeaways, to go back: Bitcoin is volatile for now, and volatility matters if you're trying to time the market, right? You're trying to be in and out of the market quick and you're day trading, but that's not a good idea. You probably shouldn't do that. And Bitcoin is compared to the S&P 500 freaking every day, but it's important to note that the two are so much different in terms of purpose and primarily for this conversation of volatility, they're significantly different in market cap. Again, Bitcoin is 1.3% of the S&P 500 by market cap. That is significant, meaning that, yeah, it should be more volatile, and it is. So that's kind of my thoughts on volatility. You know, I think volatility is kind of a funny argument because this one I've had several conversations on, and it's like it's funny because you can tell whenever somebody's trying to be aggressive in a conversation, they're trying to be offensive instead of defensive, and they're trying to come at Bitcoin and say, "Oh, well, you know, you want to use Bitcoin as a medium of exchange, as a currency. Well, what happens if I get paid in Bitcoin and then I got to pay my rent or my mortgage next week, and the price of it goes down, 50%, and now I can't pay my mortgage?" It's like, okay, well, right now the infrastructure isn't even exactly put together where we can do that quite yet. The infrastructure hasn't grown to the point where we have mass adoption, and the market cap has risen to support the actual use of it every single day by people as a medium of exchange. But then it's like, yeah, Bitcoin is volatile. Like, obviously, if you're anybody with a brain, you can objectively look at Bitcoin and say, wow, this is kind of volatile, but then again, you got to ask yourself the question, compared to what? It's volatile compared to, the S&P 500 that everybody's used to investing in. Well, yeah, it absolutely is. But does it make sense to compare it to that? Does it make sense to compare Bitcoin to the market cap of the S&P 500? I don't think it quite does. I think that there are a lot of similarities in the way that people trade the two, right? People trade Bitcoin and the S&P very similar, as we know that the markets have all tracked each other for a while now. And I'll say the crypto markets and the S&P 500, or the equities market, they've all tracked each other very, very similarly, and that's because people treat them similarly. I think that'll change over time, because as people learn that Bitcoin is not a security, as they learn what Bitcoin is, they're going to realize the value of that, and will then start trading it accordingly. And the market cap will grow as adoption increases, which will reduce volatility. And at some point in the future, Griff, I don't know when, we are not going to be having this volatility conversation at all.
It's so yeah, I think we should wrap it up there, but I just think it's awesome that nobody has figured it out yet, because I'm getting all of the sats. Because you talk to other people right now, and I tell them I like buy Bitcoin, they're like, ooh,
How you
it's
doing
going
right now?
down. I'm like, yeah, it's going
I'm
down.
buying more.
I love that. I'm so excited that it's going go down. I mean, dude, you think about the legends that will be told about you if Bitcoin goes like $3,000 right now and you're just stacking. You're just like,
Oh,
dude, what do
yeah,
you mean?
dude.
You're like not even worried about it. I would say this. I'm not sure what would get me to stop buying Bitcoin. An absolute crash in hash rate, and it just like wiping off of the earth. That would get me scared.
Yeah,
But
for
I
sure.
wasn't, but also with context, because that's happened before. And the context was China banned it, and that's where 67% of mining was. So, man, I don't know what'll ever get me to stop buying Bitcoin. Maybe nothing, honestly. I mean, I just don't see what is ever going to stop us from continuing to stack sats, unless it goes to zero, guys. And if it does, then I'll just buy the whole network. I'll buy all 21 million. But that just is not going to happen. I mean, obviously, Bitcoin has quite a bit of support at this point, and it's actually a very real, tangible thing. I just love it. I love it, Nick. I love the volatility. I love that people think that this is bad for Bitcoin. Like, no, like the problem is that you live in a world where you think that your investments just shouldn't go down, like that they can't go down. Like that's not good. Like that's not the actual like nature of investing, and that's not the real world. So I don't know. I'm gonna keep
For
buying this
sure.
volatile asset that just plummets 80% and blah 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 blah.
Well, think about this too, and let's wrap it up with this here, and we'll keep this one. Maybe I say shorter. We're at an hour still already at this point. But I mean, again, checking out the fundamentals. Look at this total hash rate. Now, the total hash rate, for you guys who don't know, is it's basically the total computing power going into the network. Let's just look at all time. What does this mean, Griff? This means the network is growing.
It means the
This is
network is
Bitcoin with a
growing. The
capital
network
B.
is
This is
secure.
Here's your 30-day average. It kind of cleans it up a little bit.
And look
That
at
means the network is growing. The Bitcoin
look.
investment is growing.
Can you click on distribution?
Yep. There you go. So there's obviously a lot of pools here. Let's do.
I was hoping that there was gonna be like a map all over the
Yeah,
world.
that's what I was
Know where
thinking
it's at right
too.
now. That's
Yeah,
more
it's
what I
just
care about. But I mean, that right there is more diverse than.
here's the network difficulty. So if you guys don't know, there's built into the protocol of Bitcoin is a network difficulty adjustment, meaning as the network increases in computing power, the difficulty of the network increases as well. So this chart's going to look very similar to the total hash rate chart. So you can see, let's just look at the 30-day average. So it kind of cleans it up a little bit. So the total hash rate, you see it cruising up. And then here in May of 2021 was when we had that China ban. You see a huge drop in total hash rate there. And since we've roared back, and now America's the number one in hash rate in the world, which is great. But then going back to the network difficulty chart and doing all time, we'll do a 30-day average. That chart looks almost the exact same, right? So it's interesting to see those pieces still operating, right? The Bitcoin price is down. Guess what? The fundamentals are still operating. That's
And
good.
it's also good to note Bitcoin is anti-fragile and it's built to last. It's built to survive. It's like a cockroach, and the world's crazy. I'm not sure you can invest in anything else, any other market, any other commodity, any other asset class that you can say without a doubt isn't at some level manipulated or controlled by our lovely central authority, the United States government, the Fed. I mean, that's important to note because people are getting tired. I mean, look at Sri Lanka. Look at what just happened. They just stormed the prime minister's capital.
Yeah.
And that's something that you could very easily see happening in other countries as things worsen because listen, everything's cool with people till they can't get their coffee in the morning because it's $50. Okay. Then they're like, okay, we're not going to do this anymore. We are done. And
Yep.
I think that you have to realize that Bitcoin is currently the only truly decentralized monetary network that it works today. And if the crash of fiat currency truly happens, and you believe, if anybody's listening to this that believes that the dollar is going to go up in flames because, well, it's kind of going up in flames, Bitcoin is the only monetary network outside of a government that you can actually trust because it's trustless. That's it. Like it's the only one currently. I would love to see something else actually try to compete with Bitcoin. I don't know why, but I would.
Yeah,
But currently, there's none because they're
for
all
sure.
crypto scams. So I don't know.
Well, that was a fun conversation on volatility. I think that's a good one. Griff, it's been another fun one with you. I love hopping on here on the weekends and getting to chat some Bitcoin. Hey, come check us out on Twitter down here at Nyc and Griff Show. If you're watching on YouTube or Spotify, we appreciate it. If you're listening, hey, we love that too. Anyways, it's been a good one. I can't wait to hop on here again and go over some more Bitcoin stuff next weekend. But Griff, if you don't have any other final words, I will say peace to the viewers, and we will see you next time.